Hey, it's Kim Greenlee from the Home Store, and we're getting together today to talk about home ownership. Today, I am a real estate agent, a realtor. This is Christine. She is a loan officer. And, oh my gosh, my mind just went blank.
Got Janet
Janet.
Carter,
Yeah.
and I'm Kevin Pernozzi, and we're with First National Insurance Group.
So, we wanted to just touch on some topics that would help a first-time home buyer, or actually any home buyer. And we were all going to just discuss our roles in home ownership. And one thing that's really important is to pick a good buyer's agent, somebody that you will get along with, because you are going to be with that person pretty much every free minute of your time, whether it's electronically or in actual person while you're hunting for the house. And so it's important to get somebody that's compatible with you and that you trust. And the next thing I would suggest is to make sure that you start looking in the correct neighborhoods, and make sure you know what you want before you even start to look. What are your must-haves and what are things that you could compromise on? One thing that a buyer's agent will do for you is always represent you. The person that's got the house listed is representing the listing. They're representing the seller. So you need somebody to represent you and make sure you're taken care of in the transaction. The next thing, actually, before you even start talking about what type of house you'd like, you need to talk to somebody like Christine. You need to get pre-approved for your mortgage, and stick to that budget. Don't be looking at houses that are $50,000 above what you were pre-approved for, because you're going to be disappointed. It's a seller's market right now, and that's about all I have to say.
I'm Christine Hartman. I'm with North Point Mortgage, and Kim is absolutely correct. The first thing you want to do is to get pre-qualified. This really narrows down the search for you so that you're not looking at a price point that is outside your budget, because like Kim said, you will be very, very disappointed if you're looking at homes that are beyond your reach. So I would like to post this as the home buying process. So the first thing that we're going to do is take an application, and it seems like that is so sudden that we're going to do that, but really I need to take a look at your financial picture, see what your liabilities are, what your assets are, where are your down payments coming from, is it going to be a gift, do you qualify for one of the down payment assistance programs. So these are all the things that I need to look at in order to put you into the right program. I don't want to get into programs too much because that really comes later after you find your property, so on and so forth. So the things that we need to look at is your credit. Where is your credit? How are you keeping track of your credit? Has somebody pulled your credit, and what are your scores? Credit scores are, reported to the bureaus, and that is what we use to assign an interest rate. We're looking at your credit scores, your debt to income, and your loan to value. And the only way that I'm going to know that is by pulling your credit. So we need to get you pre-approved. We're going to pull your credit. I'm going to ask you for documentation such as 2 years W-2s, your most recent 30-day pay stubs, 2 months bank statements to ensure that you have the ability to actually close your loan. If somebody is going to gift you, we need to send out a gift letter. We need to know where the resources for that gift are coming from. So these are things that we look at so that we stay compliant. Everybody thinks it's a nightmare when you're applying for a loan because we're going to ask you for all this documentation. That's not the case. I'm going to do my job up front, and then I have an entire team behind me that is going to follow up and get the missing pieces of the puzzle so that we can get you to closing. So on here, we have the application. Then I'm going to send you to processing, and I work with one processor, and that's kind of what makes North Point Mortgage a little bit different, is I know who your processor is going to be because I work with her every single day. So the processor will reach out to you, introduce herself, and let you know what is still needed in the file. From processing, it will go to underwriting for your initial approval. Once it comes out of underwriting, we call that the initial approval, and then we will require a few more documentation, pieces of documentation, I should say. in my career, I've never had what we refer to as a one and done, like we submit a file and it's like thumbs up, yeah. It doesn't happen that way, but for the most part, we've gotten most of the documentation up front, and it's just a couple of things that we need to button up. From there, we get the clear to close, and I explain this to home buyers. The clear to close is like you're in an airplane, and you're on the tarmac, and you're just waiting to take off. Everything is set, you're good to go. And then we have closing day, but in between that 30 to 45 day period, there's a lot that goes on. I'm gonna become one of your best friends. You can call me, you can text me, you can email me. I always pick up my phone. If I'm in a meeting, I will call you back. But I think it is so important that I am reachable so that I can kind of quiet your nerves, because it is a stressful time of your life. This is the biggest purchase you're going to make, but I'm really here to guide you through the entire process. Again, you'll have your processor, but I'm always going to be your point of contact. And Kim and I are always in contact. She's letting me know where we are with the inspection. An inspection is different than the appraisal. An inspection is something that is needed when you buy a resale home. If you're buying new construction, you don't necessarily need that because most builders give you a 2-10 warranty. Again, I don't want to get in the weeds about all of this. If you have any questions, you can reach out to me. My phone number is 912-713-9636. And I'm going to hand this off to Janet, who is going to insure your home. So we need that. And Janet, take it away.
Good morning, I'm Janet Carter. I'm here with Kevin Perenunzi, and we are representing First National Insurance Group and Sandstone Insurance Partners. Our goal is to help you find the best coverage for the lowest premium. And our agency also has incredible customer service. We're just really happy for the opportunity to team up with Kim and, with Christine and Northport Mortgage. We have teamed up with Northport Mortgage in the recent past with Christine's sponsorship of breast cancer awareness. What is home insurance? Well, it's hazard insurance. It's protection for you and your lender. It provides property coverage, which reimburses losses from damage by covered losses, and provides living expenses if you have to temporarily move out because of a disaster. And it covers your personal possessions. Also, home insurance provides liability coverage. It's protection for damages or injuries caused by you or one of your household members. It also provides insurance to satisfy your mortgage lender. It protects your lender's investment. And let's talk about your premium. Your premium is based on replacement cost, in your insurance score, your zip code, material that your home is built of, wood or brick, for example, amount of personal property, and the age and condition of your home, and the proximity to services such as the fire department. Replacement cost is different from the market value. What we do is when you buy a home, we're not insuring the land, we're insuring the home. So we do a replacement cost estimator on the home to find out what your home would be, what you need in order to rebuild the home if there is a disaster. So that's really important because, again, we're not insuring the land, we are just insuring the home, and we do an estimation on the home, and that's would be what we would insure your home for. The types of policies that we do have home policies, we have townhome, condominium, and we have dwelling fire policies if you're buying a home to rent out. rent out. On the limits of coverage, we have coverage for your home, which we do with a replacement estimator. And we have coverage for the other structures like detached garages, studios, and storage sheds. We also have coverage for personal property. How much do you need? You know how much personal property that you have, and we can ensure, be sure that you're covered for that, for your personal property. We also have coverage for medical. We wanna make sure that you have enough medical coverage in case something happens on your property. We also have the coverage, limits of coverage for the loss of use. That gives you a place to stay and to cover you for essentials in case there is a disaster at your home. Let's talk about deductibles. The deductibles are the amount of money you have to pay out of pocket on a claim. So when we're writing your policy, if you want to have a lower premium, then you can have a higher deductible. Or, so if for a $1,000 deductible would be more expensive than if you had a $2,500 deductible on your insurance policy. There's also certain hazards that aren't covered on a standard homeowner's policy, but we do have insurance for flood. If you are in a flood zone, we can write that, or earthquake insurance. Now let's talk about, discounts that are available for home insurance. The discounts on a home is if you have an alarm system, like with having a fire and burglary system that's monitored, that gives you a great discount. Smoke detectors and fire extinguishers give you a great discount. And on policy upkeep, let's talk about, if you pay your premium on time, if you keep inventory of your possessions, because those do change as time goes along, and you maintain your home, that helps to keep up the home value. And again, we at First National Insurance Group and Sandstone Insurance Partners, we want to work with Christine and Northport Mortgage to provide you with the best coverage for the lowest premium. But we also just want to make sure that you are insured to what you need to have, and working with them, we're excited to be a team, to work as a team with them.
Great job, Janet. A couple things related to home insurance that need to be considered. So in this process, right, we've teamed up with Kim in the home store. She's representing you, helping you find the perfect home for your family. Christine's making sure the financing is worked out and you're going to have the cash available to actually buy the home. When you think about the insurance component of this process, there's a couple of specifics within the policy that, if you've never really spent time looking at a policy, could be helpful for you to know just a little bit more about. So when Janet's talking about market value versus replacement cost, right? When you think about the market value of a home, that is going to be what a motivated buyer would pay for a piece of property, right? So I want this house, I will pay X for it. That doesn't mean that's how much it would cost to replace it if for whatever reason it was gone one day. If we were going to pay $250,000 for a home on a cul-de-sac in a cute neighborhood, but then a tornado came through and it was no longer there, it might not cost us that much. And we do have a lot of tools on the back end. Janet mentioned these replacement cost estimators that our carrier partners provide for us. It really comes down to a dollar figure per square foot. Generally speaking, depending on kind of where in the market you're buying, the price point in the market you're buying, you'll see that number be anywhere between $125, $150, maybe $175 a foot. So that's kind of what you can be thinking. Don't be alarmed if you get a quote back from an insurance carrier and the dwelling replacement cost value is way higher than what you're paying for the home or way lower than what you're paying for the home. They are completely segmented from one another, okay? Dwelling, what is dwelling coverage on a homeowner's policy? So Janet talked about 5 coverage sections. There's dwelling, other structures, personal property, liability insurance, and medical payments. Dwelling, if you picked a home up off the ground and flipped it over, right, everything falls out. Anything that stays attached to the structure is going to be what is covered under the dwelling component of the insurance policy. So we're talking about flooring, studs, drywall, sheetrock, cabinets, countertops, fixtures, the appliance, not appliances, but like bathtubs and showers, things like that. Anything that stays fixed to the home is what the dwelling component of the insurance policy is going to cover. Other structures, most of the times, doesn't really apply, especially in the region that we're in, unless you've got a detached garage or you've got a pergola in the backyard. Fences would be covered under that. So if you've got a nice fence, you'd want to make sure that that figure is considered. A lot of times you'll see it as a straight 10% dollar amount that's driven off of the dwelling. That's how the insurance commissioner set up the insurance policy. So just take a look at that. if you've got anything going on that would apply. Personal property is super, super important. We all know how much stuff we have, but it's kind of hard to put a figure on what does that really cost, right? There are tools online, you can look up tools online that can kind of help you catalog things. So I'd suggest that you take the time, we've all got a junk drawer, open up the junk drawer, because sometimes there's some real value in those drawers, right? And if something were to happen and the worst were to happen and someone's house were to burn down, you would want to make sure that you're made whole for everything that you own, not just the really expensive couch that you paid for or the TV that you know you considered in that dollar figure. If you're a business person and you've got a lot of dress clothes, think about the amount of money you've spent on clothes and shoes and things like that. So these are all things you want to think about when you're coming up with a personal property limit for your insurance policy. A lot of times the carriers won't write it less than 50% of what that dwelling figure is. So don't be alarmed too if you see if you're buying a $400,000 house, there's $200,000 listed on the policy and you're like, there's no chance that I have that much stuff. There's not a lot of premium rate in that component of it. Your premium rate on the homeowner's policy is mainly driven by the dwelling component. So it's not as big a deal as it may seem. There are a couple specific limits you're going to want to know about, things like jewelry, firearms, cash, stamps, collectible silvers. There's specific limits within that blanket limit of coverage that you're going to want to make sure that you take a look at. So if you've got any high value of jewelry or anything like that, just talk to an insurance person to make sure you're protected the best you can. And the last piece that Janet talked about was deductibles, right? We buy insurance for when the worst happens and something's going on at home. As you want to make sure you set a deductible at a limit to where you wouldn't want to have to spend any more money on top of it, but you want to be a little bit careful about what you do file claims for. Claims stay on your loss history for up to 5 years, right? So if we file a $500 claim, you're going to spend more than that on insurance premiums over 5 years than if you would just fix the broken window that the baseball got thrown through. So just have discussions about that with someone as well, because if you can set, $1,500 or $2,000 in cash aside for something going on at the house, it may behoove you to have a $2,500 deductible. It's not completely out of the realm of possibility. So have those discussions with your insurance person, because it really is an important way to make sure that you're protected as best as you can be without spending more money on it than you need to, right? So we've got the house covered, we've already bought it. Kim did a great job getting you a bunch of options. All of the fun of this process, you've moved into the home, all of the fun is starting to wear off and you're kind of settling back into your real life. The last piece that you want to consider and just have discussions about with your family is long-term planning. I personally, somewhat newly married, I've got a 6-month-old son. We just bought a house within the last year, right? What were to happen if my wife or I were to pass away? We each have decided that we would want our son to be raised in the home that we bought. But we're a two-income household. Neither of us could afford our home on our own, right? So we bought life insurance. It is something, it's kind of morbid to talk about, but if I were to pass away, Kelly would not be able to afford to live in our home, and that's the community that we want him raised in. So there's a lot of inexpensive tools out there to help you with long-term planning, so that should the worst happen, your family, your spouse, your children would be able to sustain the livelihood that they have today, the quality of life that they have today without you there. So you need to have those discussions. Typically with life insurance, you want to plan for any outstanding liabilities, i.e. a mortgage, car payments, things like that. And then you want to consider at least 1 year of total household income, or sometimes 2, right? That way you can get through, the house would get paid off. That's going to cut a huge budget line item out of your monthly cash flow. And then, things would move forward. So the cool thing about life insurance is there's a million different products out there. You've got term life insurance, there's whole life insurance that creates a cash value. A lot of times some of these kinds of policies are investment vehicles as well, to where the premium that you pay in will minimize over time, and it will kind of catch up and pay the premium off itself. So if you don't have life insurance, you've just bought a home, talk to somebody about it so that you can make sure your family can sustain the quality of life that you've invested in. But yeah, so Kim, we'll hand it back over to you, and thank you so much for letting us be a part of this today. We're really excited.
I learned so much from you two today. I really did. I mean, things I didn't think about.
Mhm.
And we don't like to think about what
No,
could happen,
course
but
not,
we
but
do need to prepare for
smart
it
to
because
plan
it's
for it,
horrible
sure.
if it doesn't happen. So, that's gonna wrap it up for us today. You can reach me at 404-844-9081 if you have any questions whatsoever about real estate, starting your real estate search, whether you're a buyer or a seller. Christine's already put her phone number out there. We're gonna do all of our business cards along with this post. Did you guys want to just say how you can be contacted?
Yeah, our office line is 770-513-2264. Jane and I work in the same office, so you can reach us there, and then we'll make sure our contact info's out as well.
Thanks so much.
Thanks,
Thank
guys.
you.
Good luck.
Yeah.